Assalamu alaikum. So today our topic is the capital market securities, and in capital market security our first topic is common stock. Common stock, that is a type of the security of the capital market. Why? So let's study that why common stock or common shares, this is also called common share, is a capital market security. Why this is not a money market security? So look at what is common stock. First of all, we must know about that what is common stock or common shares. So common stock is a security that represent ownership in a corporations. In the United Kingdom, common stock is also called ordinary shares. Dear students, common stock is a type of the security that represents ownerships in a corporations. The holder of the common stock elects, not select, keep in mind, elects the board of directors and vote on corporate policies. This form of equity ownership typically yield higher rates of the returns of the long terms. And in the time of the liquidations, common shareholders have the rights to accompany assets only after the bondholders, preferred shareholders, and the other debts holders are fully paid. So after that, they have claim over the assets of the business. That's why this is also called residual owner of the assets. Mostly common stock is reported in the stockholders' equity sections of the company balance sheet. So, what is common stock? Common stock is that type of the securities where ownership right is given to investors. With the common stock, if the company goes bankrupt, so the common stockholder do not receive their money until the creditors in external liabilities paid by the business, until bondholders are satisfied by the company, and preferred stockholders have received their respective shares. So after this, if something are left, so then common stockholder will distribute those among themselves according to their investments. So this make common stock riskier than debts and preferred shareholders. Why? Company when bankrupts, so first will satisfy the bondholders and preferred stockholder, and if something are left, so if something are not left, so common stockholder don't have the claim, they don't have the right to claim. So that's why common stock is riskier than the preferred stock and the debts or bonds stock. The upside to the common shares is that usually outperforms bond and preferred shares in the long run Many company issues all three types of securities. Most of the company at a time, they can issue common stock, they can also issue preferred stock, and they can also issue the bonds. Keep in mind, noted it, dear students, that the first ever common stock was established in 1602 by the Dutch East India Company, and that common stock introduced on the Amsterdam Stock Exchange, Germany Stock Exchange, Amsterdam. Dear students, there are several international exchanges for the foreign stock, such as London Stock Exchange, Tokyo Stock Exchange. So those companies that are smaller in size and unable to meet an exchange listing requirements are considered to be unlisted companies. They are unable to fulfill the requirements of the listing in these stock market or stock exchange, so they are considered to be unlisted companies. And these unlisted stocks are traded on the over-the-counters bulletin board. They are trading in the over-the-counter markets. So these are called the over-the-counter bulletin board. They will trade in the OTC market, over-the-counter market, but they will take permissions from the over-the-counter bulletin board, that is called OTCBB, or this board is also called pink sheets. They will take permission and then they are trading in the market, over-the-counter markets. For a company to issue stock, it must begin by having an initial public offering, IPO. An IPO is a great way for a company to seeking the additional capital and to expand their capitals. To begin the initial public offering IPO process, a company must work with an underwriting investment banks, which helps to determine both the types and pricing of the stock. Means that these investment bank will give them advice that how much stock in the authorized limit the company should issue, number one. Number two, and how to fix the share price or stock price. So investment bank, they are working in the newly issued stock for the company. They are helping in the fixing the price as well as to trade their stock in the stock markets. Why? For in the newly companies, they are facing problem. Investors not trusting on them. So the investment bank work is in underwriting. Clear? So after the IPO phase is completed, the general public is allowed to purchase the new stock in the secondary market. And In this way, the buying and selling of the stock taken place. So if you noted from the full discussions, so our main points was that common stock is a securities that represents ownership rights in the corporation. Number second, in the liquidations, common stockholders receive whatever assets remain. Means when creditors are satisfied, bondholders are satisfied, and preferred stockholders are satisfied. Means payments are made to creditors, bondholders, and preferred stockholders. So if at the end something are left, so that will be distributed among the common stockholders. So that's why these are called residual owners. Third, that there are different varieties of the stock traded in the markets. For example, value stock are the stock that are lower in the price in relations to their fundamentals. Growth stock are the companies that tends to increase in the value due to growing earnings. Their earnings are increasing, so that's why when they issued the stock price, so investors also showing interest in buying the common stock or common shares of that company. So that's why company increase their share price. Investors should diversify their portfolio by putting money into different securities based on their appetite for risk. So in simple, if someone asks for us that what is common stock, so common stock is a long-term capital markets securities which have ownership, which give ownership rights to investors of a corporations. Features of the common stock. That common stock, what are the features of the common stock? So just like the preferred stock or the capital market features, so common stock also have some features. One by one, we are now going to explain it. Features of the common stock are characteristic of the common stock. Sometimes we also, if the questions come in the paper, that write down the characteristic of the common stock. So it means that features of the common stock. So one of the most popular features of the common stock that anyone can buy and own it, hold it and sell it when in profit. Also, if anyone wants, that he or she can hold it forever and enjoy the yearly dividends for the lifetime. So common stock have many unique and popular characteristics. This is why it's very popular investments all over the world in the all type of the companies. The rights to vote and elect directors. vote on corporate policies, decisions making and strategies. Look at, is common stockholders have ownership rights. So then they have the rights to elect, not select, keep in mind, to elect board of directors, to make the corporate's policy. So the different corporate policies, voting are also conducted. That let's suppose if there are three policies, A, B and C policy, which one policy should be adopted? For that purpose, voting right are given. Through by voting right, common stockholder can express their decisions. And similarly, the decision regarding to the strategy of the corporations. So first one feature is words, that is the voting rights to the common stockholders. Is common stockholders of the company are enlisted in the stock market. Like look at, if you invest in the common stock, so you will be considered as a specific portion as a owner of that company. So your names will be registered in the stock markets. So you have the capability of casting the vote while electing the board of directors. This privileges give you the right to elect the most efficient person for the company. Sometimes shareholders express their opinion in the major decisions making for the company by voting. Like what are the major decisions? Just like in mergering or in acquisition. Like we have a competitors and we want to acquire that competitor's business. Yeah, let's suppose we wanting mergering with other company to fulfill a project, to complete a project. So in this type of in case of these type of the decisions, the common stockholders express their view. Okay. Next one is limited liability on part of the common stockholders. So limited liability in the common stock, this is another one characteristic or features of the common stock. When it is about the liability of the ownership, so you have the limited liability in the common stock. In simple words, dear students, the portion you have purchased from the stock market is actually your total liability. For example, you are holding 10 shares of a company which has 100 share trading in the market. So if the company go bankrupt, the maximum amount you can lose is the value of 10 shares. You will just only lose your own investments. This feature is called limited liability on part of common stockholder. Like your 5% you have the ownership right. So it means that on the 5% asset you have ownership right, and similarly you are also you will also pay the 5% of the liability of that. Next one, in liquidations, common shareholders have right on the company assets only after the bondholders, the preferred shareholders, and the other debts holders have been paid in full. This is another one characteristic of the common shareholders, that when liquidation of the company taken place. So first of all, the debts holders payment should be made. After the debts holders, bondholders payments will be made by company. After the bondholders, preferred stockholders will be fully satisfied, and if something are left, so then the common stockholders will be satisfied. That's why common stock or a risky stock. Next one characteristic of the common stock is that to receive the rights to receive the dividends payments, not fixed, fluctuating. Capability of receiving periodic dividends. So the dividend is the most important part of the common stock. The image, capability, or attracting investors depends on the dividend declaration capability. As a common stockholders, you have the right or the capability of receiving the periodic dividends. Dividends means profit on the share investment. The extra earning, the net profits of the company should be divided amongst all the common stockholders, and that is called dividends. So the dividends of the common stockholders, that is not fixed. If company earns more profit, so more dividends will be declared to the common stockholder. If company make less profit, so less dividends that will. If company are in break even, no profit and no loss, so common stockholder don't claim for the dividends. And if company are in loss, so common stockholder will compensate the loss. So that's why common stockholders will receive the dividends but fluctuated. Clear? Next one, the power to sell the stock, liquidity right. That is called liquidity right. So company, when they issued the common stock to common stockholder, so is the maturity of the common stock is unlimited until and unless the business are in operation. So common stock will not be called back, will not be redeemed. So, but it doesn't mean that, let's suppose if I purchase the common stock of ABC company, so till the company are in their operation, so I will not sold out the common stock. I can, so I have this right that any time I can sold out the common stock. Sometimes the shareholders, they want the regular dividends, so they keep those stock with themselves for the long period of time. But common stockholder also have the right towards the rights to sold out the shares, common shares, and get the capital gain. Capital gain means, let's suppose the company shares I purchase on $10. Now the share price in the market are increased to $15. So I sold out the common stock and get per share capital gain of $5. Why? I purchased on 10 and I sold out on 15. So this is called the liquidity rights, or we can say that rights to have the capital gain. Like when you buy a stock, the price may go up or down. So this is one of the primary characteristic of the common stock, that in this case you have the rights to sell the shares to others and lock your profit. Then when you sold out the share, then profit will not, you are not have the right to get the dividends. That persons who buy those common stock, now after that dividends or profit he will receive or she will receive. Clear? So as there is an appreciation in the price, that's why you sold out it. So that appreciation in the selling price, that is called what's capital gain. So rights of the capital gain or liquidity, that is also features of the common stock. Preemptive rights. Preemptive rights means that when company already have the common stockholders and the board of directors decided that we should sold out,